did all the hard work, found a good fair value gap to trade off, but it still failed? Don't worry. In this video, I'm going to show you how to make money even when you're wrong. Sounds unbelievable? It's not. Let me show you how. Here's a quick peek at some of the trades that we took. You can see the number of points we have captured despite being wrong initially. In this video, I'm going to show you in detail how the trade plan was formed and executed. So let's dive in. This is a chart of the Bank Nifty index and we are on the daily time frame. When the 30th April daily candle closed, we got a normal fair value gap where the third candle of this pattern closed below the high of the second candle, and now we are expecting price to now come and tap into this fair value gap and give us an entry going back up in the bullish direction. In hindsight, we know we were wrong, but let's see how we still made money. According to our system, if we have identified a fair value gap on the daily time frame, we have to look for entry on a 15 minutes time frame. So let's jump into a 15 minutes time frame. We are on a 15 minutes time frame now, and let's see how the day plays out. Price has tapped into the fair value gap, but the interesting thing to note here is that even though we get this bounce, there are no 15-minute bullish fair value gaps that are created, which would give us an entry in the bullish direction. As the day goes on, price continues to create bearish fair value gaps going down, which is good, which is what we like to see, the kind of manipulation that we like to see. But still, there are no bullish fair value gaps that are created, which would give us our entry. As the day came to a close, though we had a bullish bias, we did not get any entry. Even if you are a day trader, that doesn't mean that you have to take a trade every day. Only take a trade when your system triggers one. Don't force yourself into a trade. We are back on the daily time frame, and if we see, the second May candle has closed inside the fair value gap. This is your first sign that there is a possibility that this fair value gap might not hold. So we spent one day where we did not get a bullish fair value gap. The candle closed inside the fair value gap, telling us that there is a possibility that this fair value gap might not hold. Now we need more confirmation to know if price is going to head lower, and we are going to look for that on the next day. We are back to observing price on the 15 minutes time frame. The next day opens with a big gap up, and after this gap up, we are obviously going to get a fair value gap, a 15 minutes fair value gap, but we are not going to enter straight of it because yesterday's closing, the daily candle closing, has put in some seeds of doubt. So to confirm, we are going to mark out our 15 minutes fair value gap and now see if price on the 1 minute time frame, because that's the corresponding time frame to the 15 minutes time frame, is going to give us an opportunity to enter in the bullish direction if this fair value gap, this 15 minutes fair value gap, is to be respected. Let's dive into the 1 minute chart now. Here we are on a 1 minute chart on the Bank Nifty index. Let's play this out and see if we get a bullish entry on the 1 minute time frame. Price taps into the fair value gap, but there are no 1 minute bullish fair value gaps that are being created, and price is continuing to go lower. This itself is telling us that now the trend might be changing, and it's better that we change a bias from bullish to bearish and start looking at any targets that we can define on the lower side. So let's switch back to a 15 minutes time frame. We are back on a 15 minutes time frame. Now here at the close of the 10:15 candle, what we can see is a bearish 15 minutes fair value gap, which is a breakaway gap as the third candle has closed comfortably below the low of the second candle, going down, breaking, trying to get into the lows here. This is a good indication that price might be headed lower. Now headed lower where? So let's find our target on the daily time frame. We are back on the daily time frame, and when we see that this fair value gap is not holding, so our next premium array, the next line of defense from where bulls might grab hold of the market again, is this order block sitting right here. We are going to highlight that. So this red candle is the order block that can act as a line of defense. So for this period, when we know that this fair value gap here has failed, we can now target on the lower side this order block and look for a bearish trade from these levels targeting this order block. And that's exactly what we did. Let me show you how. We got this trade on a 5 minutes time frame. Let's head back into the 15 minutes time frame and then into a 5 minutes time frame. Here we are on a 15 minutes time frame. At the close of the 10:15 candle, which means at 10:30, we got this bearish fair value gap where we were certain that now price was headed lower and our target was this daily order block highlighted in orange. This being a breakaway gap, we knew that we were not expecting prices to go back into this fair value gap, at least for now. So to look for an entry, we could either buy the close of this candle, or what I like to do is go one time frame lower and see if there is a normal fair value gap which you can work off. So let's go into a 5 minutes time frame. Here we are on a 5 minutes time frame, and what we can see at the close of the 10:25 candle, that is at 10:30, we have a small fair value gap, a normal fair value gap created on the 5 minutes time frame. Now this fair value gap can act as our perfect entry, looking for lower prices and ultimately having the target of this daily order block, which is highlighted in this orange zone here. This is exactly what we did. We can initiate a short position. Here, our stop loss will be above the high of the first candle of the fair value gap, which is this candle, and our target will be this daily order block, which is here, and we can see an excellent risk to reward ratio of 1:5.3. Let's play this out and see what price did. As soon as we get our entry of this fair value gap, price immediately starts trending lower. There might be one or two deep retracements that we had to see in this trade, but at all times our position was always in profit. There were no major drawdowns during this trade, and we could comfortably hold our trade waiting for our target at this level, which was achieved here. This was an almost 300 points trade on the index, and if you were trading options, this trade would easily have given you more than 200 points, even if you had bought an at the money put option. So we made a ton of money with minimum risk, even when our initial bias was wrong. Our fair value gap failed, but we quickly changed our bias, again with the help of fair value gaps on a lower time frame, to target the next PD array on the daily time frame, which was this order block, and in the process made a ton of money. This is how you can make money even when you're wrong. Now, the story doesn't end here, because this price action was taking place on a Friday, and the Friday close gives us even more direction going into the next week, where we can now plan our trades for the coming couple of days at least. Let's have a look at how we did that. We are now on the weekly time frame of the Bank Nifty index chart. This is the close of the weekly candle that ended on Friday, the day we made money when we were wrong. And if you look closely, this weekly candle has closed below the previous swing high that the index had made made an all-time high and is closing below the previous swing high. This is called as sweeping liquidity. It has tapped into the only premium array available, and now there is a very high probability that price will come and tap into this fair value gap that it has left behind between these two candles. Now we have a further target to look for on the lower side, highlighted by this purple rectangle. Now we can use this to our advantage. We know in our perfect entry pattern that when price comes to tap into a higher time frame fair value gap or point of interest, it does so creating bearish fair value gaps on a lower time frame. So if we are looking for price to reach a weekly fair value gap, there is going to be a strong momentum on a 75 minutes time frame that is going to induce those people on the 75 minutes time frame to sell, and that is exactly what we are going to look for. Come this week from Monday, we are going to look for 75 minutes bearish fair value gaps, which are going to give us an indication that price is now headed lower into this weekly fair value gap. This is what we are looking for. Let's dive into the charts and see what happened. This is the 75 minutes chart on the Bank Nifty index. We open with a gap up, but price quickly turns back down, leaving behind a bearish fair value gap that we are looking for. Here, now we can look for price to tap into this fair value gap and give us another trade going down to our target, which is this purple highlighted triangle, the weekly fair value gap. Now we have another trade that we can look for. So let's go into the 5 minutes time frame, because we have identified the fair value gap on a 75 minutes time frame. We are going to look for our entry on the 5 minutes time frame. Here we are on a 5 minutes time frame on the Bank Nifty index. Let's see if we get our entry. Price slowly makes its way back up. Make a note, I am not going to enter off this fair value gap here, because this has happened at 3 p.m. and there is too less time for price to come down. As a rule of thumb, I don't carry options overnight, as it can be quite risky. A huge gap up can completely throw your risk management haywire. So considering the time, I'm not going to enter off this fair value gap. I'm going to look for an opportunity the next day. And what happens on the next day? This is what we get. Here we have this fair value gap that is created at the close of the 9:35 candle on Tuesday, the 7th of May. And here we can now initiate a short position where we can go short here. To be safe, we can place our stop loss above this swing high and target this or the weekly point of interest. Let's see how this played out. Wow, that was quick. Price didn't take too long to come and hit our take profit. This was an excellent 500 points trade. Almost 1:4 risk reward trade. All this while our initial fair value gap failed and our initial analysis was wrong, but we kept looking, and fair value gaps told us a story, led the way, and gave us two excellent trades on 2 days. So how did our system help us? First, it did not give us an entry when our fair value gap was failing, because we did not get any fair value gaps on our entry time frame, and saved us from a loss-making trade. Second, when it was creating bearish fair value gaps against our position, it was giving us an indication that now the trend is changing. Third, using fair value gaps, now we were able to define exact targets towards which price was making its way, When we aligned our time frames correctly and learned to look at the larger pictures, we were now able to hold our trades for even better and bigger targets. And the most important of all, even though we were wrong in our original analysis, we were still able to make a ton of money. In today's video, we made use of two new concepts. First is what I like to call the art of war, as to if your fair value gaps fails, which is your first line of defense, where is the next line of defense? Where do you expect prices to head to if not the first premium array, which is the next premium array? Using this, we defined our targets on the lower side. Second important concept is time frame alignment, and this is what changed the game for me. When you align your time frames correctly, we went from weekly to daily to 75 minutes, 15 minutes. We got our entries on a 5 minutes time frame, but our targets were on a weekly time frame. When you do this properly, this is where you get excellent risk reward ratios and you get big trades that you can be a part of. Now you tell me, on which of these concepts do you want to see the video next? Do you want a video on the art of war, on the different premium arrays that you can target when one fails, or do you want to see one on time frame alignment, which according to me is the secret sauce behind success for me personally? Till then, take care and trade smart.